Okay, I was thinking about what to talk about today, and I met a couple yesterday that wanted some quotes on their home and their autos, and I asked them, they showed me their current policy, and I asked them if they understood all those numbers, and about 85% of the people responded to me, no. So I figured, okay, then I'll try to explain the numbers so that everybody would get an idea. Now, I thought about either the home or the autos. In 10 minutes, I can't do the home. It's a lot more complex. So I thought I would talk about what all those numbers mean on your auto policy. Okay? So the first thing that you usually see on your policy, it talks about liability. Or it might be called bodily injury. And usually it'll show a split figure, like 100, 300. Now, does anybody know what that means? Yes, sir.
I believe it means 100 per occurrence, up to 300,000.
Okay, what it is that $100,000 coverage per person.
Per person.
And a $300,000 per accident. And that is the liability, that is in case you are at fault and then someone sues you for damages. Okay? Now that comes in different levels, and the higher you go, of course, the more coverage you have. State minimums is $25,000, $50,000. If anybody's got $25,000 and $50,000, I would tell you to maybe look at that because you're probably way underinsured.
And of course, you can't get sued for more than the insurance you have, right?
That's right.
What?
Yes.
Yeah.
You can.
Oh, you can? All right.
Now, some policies may have just a one figure, single limit. It might say $500,000, doesn't have the split. What that is that it'll pay $500,000 per accident, and that's combined personal and property damage. For any property damage that you cause to other vehicles. Okay. So you can get it in single limit as well. Some of the other things that you see there would be, you might see a property damage if you don't have the single limit. Property damage covers the other vehicles. It could be $50,000, it could be $100,000, but that's what it would pay total for that accident for other vehicles. Okay. Then you have liability, and the liability is, well, we talked about the liability. Let me go into medical payments. Usually you see about $5,000 for medical payments. What that is, that covers the people in your vehicle, okay, not the other people in the other vehicles. Okay. If you are at fault, anyone in your vehicle would be covered at $5,000 per person in case they had to go by ambulance to the hospital or whatever. Okay. And that would cover ambulance, that would cover x-rays, that would cover anything that happens, okay, up to $5,000 per person. Also, if it would be a serious accident and there was death, then it would pay up to $5,000 for burial service. Okay.
And what if the cost, certainly a hospital visit, there's no hospital visit that costs less than $5,000. What happens if it goes over that? Are you now personally liable, or will their insurance kick in?
Now remember, it would be the people in your vehicle.
In your car, yeah.
If you have your own health insurance, it would kick in secondary. The auto would kick in first.
So my health insurance would cover them?
No, it would cover you
Okay.
or anybody that you insure under your health.
Okay.
Their health insurance would pick up anything.
So you're the first 5,000 and then their health. But let's say they don't have health insurance. Are you liable for the next 10,000 or 50,
Yes.
2 days stay in a hospital, 20 grand? Would you be potentially liable for that extra 15,000?
Yes, you would. Okay. The other things that you might see is comprehensive. Comprehensive is if any kind of act of God other than earthquake, it could be falling objects, could be hail, could be wind, could be hitting an animal. It covers your vehicle. Okay. And usually there's a deductible goes along with that, anywhere from $250 up to $1,000, you can get it higher. Okay, but that covers your vehicle in case something like that happens. Collision is if you are driving your car and you hit a fixed object. If you hit a post or a tree or went off into the ditch, flipped over, that is collision. Okay, and again, it comes with a deductible also.
That garage pillar came out of nowhere, by the way. I don't know, it just sprang up from me.
You live in a bad neighborhood.
Yeah.
A couple other things that are options, you could get roadside assistance. Roadside assistance costs about $1 per vehicle per month. Okay. If you have AAA, you probably don't need roadside assistance, but basically it covers lockout, gas, anytime that you're on the road and you're stuck to the side of the road, you have roadside assistance, you call up, someone responds, and they'll pay so much, and there's different levels that you can get for roadside assistance.
Now, quick question on that one. Is it for just your car? Is it for you in any car? You know, how does roadside, well, AAA, if you're in somebody else's car and it breaks down, they'll come in and help you. But roadside, I think it's just your car?
It is your car that you're driving.
Yeah, your car that you're driving.
Yeah.
If somebody else is driving your car?
Yeah, if you're in another person's vehicle and they have a problem, AAA covers that.
AAA will cover that,
but
roadside won't.
Yeah, roadside does not cover that. Okay. The other thing that you could get is like a car rental. In case your car has been damaged in an accident and it's in the shop for a week or two, then you can get additional insurance that would cover so much per day, so much maximum. It might be $20 per day up to $600, so that you can get a rental car. Okay. So that's kind of the explanation of the auto insurance. Now, I passed out these. Everybody got one of these. What I want to do, and I did this about a year ago, so some of you may have seen this, but I think there's enough new people now that I could go through this. What this is, and that's it all blank because I'm going to ask for your help to fill it out. Okay, what it does is it's got the liability limits on the left-hand side, and then at the top there's one person, number 2 person, number 3 person. So, like the first one, okay, $25.50 is the liability limits that you have. Now, the first person has $50,000 claim. That he has injuries and he's suing you for $50,000. So, how much would your insurance cover you pay to that person in that case? $25,000. Okay. So that means that how much is not covered? $25,000. Right? Okay. Now there was a second person that was hurt, and they're claiming $200,000 liability against you. How much of that's going to be paid? 25.
Oh, because you already.
Because you got $50,000 maximum per accident. Okay. And then, so that leaves $175,000 coming out of your pocket. And then the person 3 had $500,000 planned. How much of that is covered? Zero. You're responsible for the $500,000. So in this case, of all 3 people getting hurt, what would come out of your pocket total?
$700,000.
$700,000.
Not out of my pocket.
And that's if they don't have Franklin Azar as their lawyer.
Yeah.
Just
Okay, so let's look at if you had $50,000 per person, $100,000 per accident, that coverage. Okay. Again, the first person claims $50,000. How much is covered? $50,000. How much of yours? Zero. Fully covered. But now the second person had a $200,000. How much is going to be covered? $50,000, because now you've reached your maximum of $100,000 per accident. And that leaves $150,000 up to you. And then the third person? Zero, and you'd be responsible for $500,000. So how much are you out? $650,000 that you'd be responsible for. And I know that all of us have got some money put away somewhere we can cover that, right?
Yeah.
So let's look at if we had split level of 100,000, 300,000.
And is that the most common, 100, 300?
I try to steer people to have that as a minimum.
As a minimum,
Yeah. And it depends, the person has to kind of weigh what they have to lose. A young couple, they don't have a lot of money, they're gonna probably go with the lower, and, you know, they have a risk out there, they have an exposure, but they're not worth a lot of money. But as we get older, we accumulate assets, our IRAs, anything could be attached. We have more to lose. Okay. But yeah,
Actually-
100, 300 is what
IRAs
yes.
are actually protected.
Yeah.
From 401ks and IRAs are actually protected from liability. But your house, your income, those things are not protected from liability.
Dave, let me make a jump on you here. The burning question in all of our hearts and minds is how do we protect ourselves? So you might want to take just a minute and talk about umbrella policies before we get to the end of your 10 minutes and 46 seconds.
Okay. But I think you know enough now that you can probably fill out the rest of that.
Yeah.
So, if, let's say that I had the 100, 300, and if I went through there, that means I'd be responsible for $500,000. Okay. Another way to cover ourselves is if we own a home, we can have an umbrella policy. Actually, we don't have to have a home, it goes with the auto usually. That's what most carriers do. You have to have the auto before you can have the umbrella. So let's say you have a $1 million umbrella. Okay, it would pick up anything then that is not covered. It's like an umbrella over everything else. Okay, so then the $1 million would kick in for that $500,000, or in that first case, $700,000.
And a range of premiums on that for somebody with good revenue to $1 million limit?
Normally they run somewhere between $300 and $500 a year.
Mm-hmm.
Okay.
And that's for $1 million limit.
That's $1 million. You can get it in increments of $1 million up to $5 million. Some of the things that they look at that will increase that is if you have boats, jet skis, four-wheelers,
Moving
because
back.
all this is more liability.
And Dave actually has all of those things.
Huh?
Don't you have all of those things?
Yeah.
But he doesn't have the moving violations, which would be the biggest driver.
So the umbrella is certainly something that I would look at. Now, real quickly, if you own a home, you have a liability on your home too. Most people carry about $300,000. I can tell you that if you want to boost that up to about $500,000, the cost is about $14 a year more to do that, 12 months. Most people think to jump up that high to $500,000, it's going to cost me a lot more than it doesn't. Okay. And then that liability covers not just what happens in the home, but that is just under the umbrella. So in this case, you'd have the auto, then you'd have the home liability, and then you have the umbrella liability. So you can build up.
The home liability, that's just for a guest or something, or a...
No, as an example, it goes beyond what happens at the home.
Oh.
As an example, I had a person a couple years ago that was an avid hunter. He went out hunting.
Was it Cheney?
Huh?
Dick Cheney?
Yeah, well, maybe Dick Cheney, because it would have covered him. But this gentleman accidentally shot another hunter. Okay, the hunter sued him for $1 million for lost wages and being in the hospital for a while. And the home covered that. He had $1 million home liability, and that covered that. So it doesn't cover just what happens in the home.
So why do you need another umbrella over the home liability if it looks like the home liability takes care of most?
Okay, well, let's say, like in this case here, we're $700,000.
Oh, so that wouldn't, home liability wouldn't cover us?
The home would cover that, but let's say you had $500,000. Okay, and you would still be out somebody, so the umbrella then would cover that. Now, the average suit in Colorado for vehicle suits is about $480,000, average. How many do we see that's over $1 million where they get sued? So it can go, you know.
Is that because we have tort reform here?
Yeah.
So 250 is the max?